I hope you have gone through all my videos on property, plant, and equipment. Now let's test your knowledge through the help of some of the simulation, some of the questions relating to IAS 16. And let's understand the summary version of all the concepts that are relevant for us. So let's go through this question number one. So on October 2015, Krishna Limited purchased land for $20 million. So they purchased the land for $20 million, which includes the legal cost of $2 million, which means this 20 million includes the cost of legal costs. And in respect of building, the following are the outflow of the resources. So for site preparation, they've spent around 0.5 million. For material, they spent 10 million. They for the employee cost, they expend something. So now let's read what do we need. We need to understand the cost in respect of the land. What is the cost that are eligible for capitalization under IAS 16? It's the same in respect of building and the depreciation expense for the first year, that is for 2018, because this is the year in which the construction got over. So there are three output after this video. So you would be able to understand what is the amount that we would need to capitalize in respect of land, the same in respect of building, and what is the depreciation expense. So let's start with understanding the costs that are eligible for capitalization in respect of land. We've already mentioned that Krishna Limited have spent around $20 million in respect of purchasing the land. So which means that for acquisition, they spent around $18 million. And to get the land registered, the legal costs is around $2 million. Now, what do you think? Do we need to capitalize 20 million or do we need to capitalize only 18 million? Now, let's understand the concept of cost. We already discussed that all those relevant costs that the entity has incurred because of the purchase of land, they need to capitalize. If they defer or if they do not purchase the land, they won't be able to incur the legal cost. So legal cost only incurred because uh, Krishna Limited want to purchase the land. Hence, the total 20 million is capitalized as a part of land. Now let's look into the second question. What is the cost of building? Now this would be a bit lengthy computation. So let's move on because they have constructed the building. In order to make the ground good, they have spent around zero point 0.5 million in leveling the land. So site preparation cost will also be capitalized because this is directly related to the construction. If the land is not labeled, they won't be able to construct buildings on it. Then they spend on material. This is quite easy because this is a direct expense. It's 10 million. Now they spend in respect of the employee cost. I would consider it to be a labor cost because without labor, even though we have material, we won't be able to construct a land, and that's quite a general sense. So uh, they started the production, or sorry, the construction of the building from 31st May 2018, sorry, 31st May 2016, and the construction went till 31st May 2018. So this is a cycle of 24 months. So the entire beginning to the end, it took 24 months for the entity to complete the construction. So over the period of time, we have incurred around $12 million in respect of labor cost. In respect of overhead, it's 0.2 million because of some of the indirect expenses that they have incurred. However, they are directly related to the construction of the property, plant, and equipment. So the construction would so the capitalization will be zero point 0.2 million over the period of 24 months. That will come to $4.8 million. Now, another allocated overhead was zero point 0.2 million as well. So do we need to capitalize it or do we need to expense it? What do you mean by allocation? Allocation means that we have a fixed commitment that this much amount we will spend on overhead, on the other indirect expenses. Even though we do not construct, even though we do not purchase the asset, this expense is going to be incurred. So this is a kind of not relevant for me because anyways I will be spending $200,000. Hence, this is not a relevant cost for me and it is not going to get capitalized. The sixth point is income received during the temporary use of a factory. Now, this do not relate to the value creation part. This is a separate transaction. This is not related to the construction of the property, plant, and equipment. Hence, the income will go directly to the P&L. It is not deducted from the cost of the asset. So, any income that you have generated from the temporary use of the factory, this is not related to the property, plant, and equipment. Hence it is not forming part or not deducted from the cost of the asset. However, I would like to say that do not get confused this transaction with the temporary testing that we perform, because during testing we may incur some expenses and we may incur some of the gains from the sale of the testing products. So what we generally do, the accounting treatment is, suppose you have incurred $100,000 in respect of testing, and out of the testing you have gained around $20,000. So the net cost we will capitalize in respect of testing. And I have already told that if the gain from the testing exceeds the cost that we incurred on the testing, the balance amount is not going to get deducted from the cost of the asset. That will go to the P&L. Hence, these incomes are not related to the construction of the PP&E. Hence, they do not form part of the cost. Relocation expenses. We already discussed that. This should be relocation. This is wrong. Relocation expenses do not create any value to the property, plant, and equipment. I'm talking about relocation of any kind of employees that you have relocated to use the asset. These do not create any value to the PP&E, and hence the relocation is not capitalized. Relocation is not capitalized. Now, cost of opening ceremony, this is definitely not going to get capitalized because opening ceremony is not going to create value for the PP&E. This is for our own entertainment. Hence, this is the net cost that are covered under the purchase price and the direct cost attributable to bring the asset into present location and condition. So in the video, we discussed that there are three major points: the purchase price, the cost that we incurred to bring the asset into present location and condition, and the third point was decommissioning cost. We do have a decommissioning cost here. Sorry, the here we have a decommissioning liability, and hence we need to take this also into consideration to arrive at the cost of the building. So the cost that the Krishna Limited is going to incur is 20 million, and the time frame was after 50 years. And the discount rate that we have taken to be 10%. Now I've computed the present value of it, and the decom is coming out to be $0.17 million. So this is the total cost. Total cost. Purchase price, cost directly attributable to bring the asset into present location and condition, and the decommissioning cost. The total amount is coming out to be 27.47 or 27.5 million dollars. So this is the total cost that are capitalized in respect of building. In respect of building. Now let's discuss about the depreciation expense. We understood that land is not going to get depreciated. We understood that land is a part that appreciates over the period of time. It's an asset, it's an appreciable asset. So it's not depreciated. Hence, the concept of depreciation won't be there in respect of land. And I'm assuming that the land is freehold. Land belongs to us. So there is no concept of depreciation for land. But however, there is a concept of depreciation for building. Now, what's the total cost of the building we have taken? The total cost of the building is 27.5 million US dollars, and the useful life we have taken to be 50 years. 50 years. However, we mentioned that the roof has a useful life of 10 years, and other assets have a useful life of 50 years. Now the concept of component depreciation come into picture, and we need to bifurcate the total cost relating to the building between asset with a different useful life and assets and the other assets basically. So the roof consists of 25%. So it would be 6.875 million is related to the roof. And apart from that, the other assets consist of 20.625 million dollars, which means we need to depreciate 6.875 over a period of 10 years and 20.625 over a period of 50 years. So when we combine both of them, we will arrive at our depreciation expense. Let me make a quick calculation. 6.875 divided by 10 in respect of the roof and 20.625 divided by 50 in respect of other assets. Hence, the total depreciation amount is coming out to be $1.1 million, which means 0.6875 in respect of roof and 0.4125 in respect of other assets. So depreciation is 1.1 million, and there's a catch. 1.1 million is per annum. It's per annum. And here we mentioned that the construction completed on 1st May. Suppose we are following a calendar year. I'm assuming we are following a calendar year, which means 1st Jan to 31st December. Here, the construction got completed on 31st May. However, the assets have been put to use on 1st August 2018. Now there's a question. Now there's a question. The question is, do we need to depreciate the asset from 1st August or do we need to depreciate asset from 31st May? As we understood that, we need to depreciate the assets from the date on which the asset is available for use. And the asset is available for use from 31st May. So we need to depreciate the asset over a period of 7 months from 31st May to 31st December, June, July, August, September, October, November, and December for the 7 months. So what we're gonna do, we're gonna divide 1.1 over a period of 7 months. So the amount that we're gonna get is 0.642 million dollars. So this is the amount of depreciation in respect of property, plant, and equipment for the year ended 2018. So this is the entire computation in respect of acquisition of PP&E. So if you do this example, you would be able to understand the costs that are eligible for capitalization, the concept of decommissioning cost, the concept of component depreciation, the concept of depreciation, how depreciation is computed, and from which period we need to take into account the depreciation expense. A 4 or 5 concept is clear through the help of this example.